Travel is more than just ticking off countries. It's about the people, the culture, the food, the moments. I'm Pippa Hudson, and on Wonder the World, I invite you to join me every week as we explore destinations both near and far, with the help of fellow adventurers who share their unique travel stories. Listen to my podcast wherever you get them.
The Money Show
on 702. Let's walk the talk.
On 92.7 or 106 FM and DSTV channel 856.
The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking. ABSA is a proud lead sponsor of the B20 South Africa 2025. My name is Ray White. I'm in for Stephen Grootes this evening. Good to be in your company. Right, coming up in the program in the next hour, talking about the oil price and what's happened with OPEC. They've had a few stumbling blocks when it comes to Iraq, Venezuela and Kuwait. So taking a closer look at that, but also the US and China, they're set to sit down tomorrow and begin discussions on trade tariffs, which also includes oil as well. So unpacking that one shortly. In our explainer tonight, we're actually staying with trade tariffs in the US and the UK. They've been sizing each other up and looking at each other to say, all right, how can we get beyond this 10% that the US is demanding when it comes to trade tariffs? There has been some sort of agreement on automotive parts and things like that, but nothing sort of definite yet. So we'll be explaining that. We're getting some information for you on that one. In the Friday file tonight, we look at a company that focuses on elegant jewellery. You don't want to miss that one. And then we got the Friday Biz Blitz tonight. I hope you've been listening to Stephen and the Money Show this week, because asking you a whole lot of questions about that, and you know how it works. The last person standing is the champion of this week, and you can phone Stephen on Monday and tell him I sent you. But in saying that, you could be eliminated right at the end. So lots of fun coming up on that one. I'd like to hear from you tonight, 072 702 1702. Your WhatsApps, will be reading them out. That's all this and more coming up on your Money Show this evening.
Walking this talk together.
Every hour.
Every day. This is 702.
Let's walk the talk.
Well, as the US and China continue to trade blows with their tariffs, oil prices seem to be caught in the middle, I'm afraid, with trade tensions easing somewhat, though, between the two. Brent crude, as a result, looks set to end 4% up on the week. It's been doing very well this week because you can see the two parents aren't fighting anymore, or at the moment, that is. US Treasury Secretary Scott Bessent is set to meet China's top economic official, that's Vice Premier He Lifeng, in Switzerland tomorrow to work towards resolving the trade disputes that have threatened oil demand. And US President Donald Trump says China should open up its market to the United States, and that 80% tariffs on Chinese goods seems right. Well, I don't think the Chinese agree with this. Current tariffs stand at 145% for China. So that's what's happening between the two of them on oil. But you also had the OPEC countries, and they've been meeting, and they said, we're going to increase demand, and if you increase demand, therefore there's a bit of a glut and prices go down. But they had a bit of a problem with Venezuela and Iraq, among others, because their outputs had a few problems there. So where do we stand with our trade tariffs, and where do we stand with oil? On the line is Manqoba Madenane, who's a strategist, fixed income, forex and commodities at RMB. Manqoba, hi, good evening. Good to have you on the Money Show.
Evening, Ray. Thank you for having me.
All right, so let's start with the US and China. I know we're going to be talking about OPEC tonight, but of course the US and China and their squabbles have a lot to do with the oil price. What are you seeing with oil at the moment? Because OPEC aren't living up to, like I said in my intro, to what we expected for this week.
Yeah, look, I think the basic guidepost is that OPEC wants to ramp up output much faster than they guided. So there's, of course, some problems that you highlighted with the smaller OPEC plus economies, right? And the reading really is these are operational issues, right? So the ramp up really is part of a broad program where OPEC contextually has been holding back output, and we need to say this is voluntary output restrictions, right? To the tune of 2.2 million barrels per day. But OPEC broadly as a group holding back to the tune of 5.8 million barrels per day. So all of this is in lieu of what has been a weak global economy really for the past few years. And so these were actions to help the market. So going forward, obviously for the oil-producing economies, holding back on supplies, implies fiscal issues, right? So for the smaller economies that you've mentioned, Venezuela and the like, Venezuela has other major issues with the U.S. There are sanctions at play. There's major operational issues. But for OPEC, my confidence is that the guidance that they've given of ramping at a pace of 411,000 barrels per day, vis-a-vis guidance of around 140,000 barrels per day, I believe OPEC Plus can achieve that. And the reason why I say that, OPEC is led by Saudi Arabia, and Saudi Arabia itself sits with what we call spare output capacity to the tune of around 5.3 million barrels per day.
Right.
So Saudi Arabia could actually take more of the slack, but ramping up obviously means more revenue for them. So as a cartel, they need to coordinate this as a group. So we shouldn't read what's happening in the smaller economies as a signal that OPEC may not be able to ramp up.
Right.
Certainly not. Yeah.
Let's put your head on the block. Where are we going with this?
Yeah.
I mean, $64 a barrel. That was Brent crude earlier on today. Where are we going with this? Because are we going to see fuel prices back home here increase? What happens next?
Look, I think the tentative bounce should be classified as that short term. I'm negative on the oil price. I believe that the global oil market is in a surplus. We're modeling oil prices to hold at around 65, but we as much as that's our view, we spend a lot of time highlighting the downside risk. So what is this downside risk?
Yeah.
So we sit fundamentally with global oil fields that have a break even. That's anywhere between 45 and 50, right? So technically, one of the reasons why we haven't heard, any news of supply reductions, even when oil price tentatively fell below 60, is because these oil fields can accommodate and still be viable at that level. So what this means essentially is that oil prices could actually dip even below the 60 mark, and you'll still have supply holding up relatively, or at least from the major oil fields.
Well, that's good news for us. That is good news for consumers.
Yeah,
it really is.
So I certainly buy the weaker oil price view. So 65 is where your head should be, but don't be surprised if we retest the levels at around 60 or even lower.
Yeah. Now, those tariff negotiations between the US and China. I was reading a Reuters article today, and it all could come down to this meeting tomorrow. The United States, of course, wants more oil from China, but they want to keep their tariffs there. What are you reading into all of this? I mean, how is this going to affect the greater picture?
Yeah, look, I like to stand away from the noise. Okay, so what am I hearing outside of the noise, right? We are in a de-escalatory environment. The tariffs in a negotiation setup are an extreme type of a point that poses material downside risk both to the U.S. economy and as well as China. Interestingly, the macro real economy indicators don't suggest that the economies are reeling just yet. The U.S. economy reported negative GDP growth, but I want to highlight this is purely an arithmetic outcome of imports loading up prior to April 2nd.
Yeah.
Real activity indicators suggest the economy is resilient. China as well is sitting with a similar type of an outcome where the export data reported this morning showed us that, they're not really reeling. The tariffs aren't yet reflecting as a headwind. So they go into these negotiations knowing that there's not much of a hit, but they acknowledge the downside risk. So within that environment, the fact that we do have a negotiation, I believe that we will de-escalate. My reference point is that if we dial our minds back to the run-up into the U.S. elections, Trump was constantly talking about a 60% import restriction against Chinese goods.
Yeah.
So to achieve that, perhaps the path to that is to dial up 145 and you then reduce to, say, 80, which you mentioned, and eventually the 60 that they actually wanted. What seems to be happening is that Chinese downstream competitiveness is becoming more and more entrenched in manufacturing. The fact that we still see not much of a hit to the manufacturing exports, the volume growth doesn't suggest that this is a headwind. I think we'll land in a situation where Chinese authorities eventually accept some sort of import restriction. It could be 60, it could be 80. We don't know.
But it's like you say, Mankoba. It's like you say. We've got to a situation where those headwinds aren't there yet. They aren't there yet. But it could be the tsunami. Could be coming later. I don't know. We'll have to wait and see. We'll have to leave it there, I'm afraid. Mankoba Marinane, who's a strategist to fixed income, also forex and commodities at RMB. Thank you so much for your insight tonight. I think it's going to be a very interesting weekend when it comes down to these negotiations. But like Mankoba said, I wouldn't hold your breath about anything happening. These are still early days, and they're still sparring. They're like two boxers, and they're kind of sizing each other up. So let's, I suppose, the next few weeks or months will tell us all about exactly what's going to be happening.
Because this journey is better taken together.
Let's walk the talk. 702.
So let's stay with our tariffs, and our Money Show explained it tonight. We're talking about the US and UK. They've had some sort of agreement when it comes to vehicles and metals, but apart from that, their tariff that the US has set on the UK still stands at about 10%. And reports say they are nowhere near to finding a broader agreement in other areas, with the US sticking to its 10% tariff demand. So joining us to discuss this is John Stopford, who's the head of multi-asset income at NinetyOne Asset Management. Hi, John. Good evening. Good to have you on the Money Show.
Good evening.
What exactly has been agreed to between the US and the UK? It seems like early days there as well.
I think that's right. I think it's a framework. I think there are some broad brush strokes. It's clearly a little bit easier than the sort of initial tariffs that the UK was facing, but arguably the UK is the easiest country to do a deal with. We're not a country that runs a large trade surplus with the US, and post-Brexit we're sort of looking for anybody who'll do a trade deal with us. So I think it was a pretty easy win for both sides, but not much detail.
Some do argue that Trump won't leave it at that and he will want to raise tariffs again. Or are we, like you're saying, looking at the UK, which is a traditional ally and, it's sort of a soft target, we'll just leave it alone?
Well, I'm not sure necessarily being an ally or a friend of Donald Trump is that helpful at the moment. If you look at the way he's treated his traditional allies, it's not clear that that puts you in a stronger position than, some authoritarian leader like Vladimir Putin that traditionally has been somewhat hostile to the US. So I think the biggest issue is we don't know what Trump plans. We don't know where things will end up. We don't know whether he'll backtrack or return to deals later on. My understanding is the deal that's being talked about is only for 12 months. And even that, may not last. So that's the big issue, I think, with Donald Trump and his policies. They create uncertainty, and that's not, I think, great news for anybody trying to do business with the United States. For him, it's the art of the deal. For everyone else, I think it's just a mess.
Some are arguing that perhaps President Trump won't leave it at that, and he will continue. But some others are arguing perhaps have a look at what's happening with the UK, and that could set the tone for other negotiations, because we're all starting, John, to get the picture that he goes in high so that he can find a better middle bit. Is this the case? Are people looking at the UK to say, okay, maybe we should try the same thing?
I think to an extent. I mean, there's clearly a view that he went hard initially and probably too hard, and obviously there was an impact on the equity market and in particular the bond market, which may have caused some pause for thought. I think it probably is true that they were always assuming they'd end up somewhere between, the opening bid and where we started, or where people were expecting things to go. I think the issue though is, the UK, I think, was a fairly easy country to do a deal with. As I said, we don't run a big trade surplus with the US. There are a couple of key industries that have been covered in steel and auto manufacturing, but I think other deals will be much, much more complicated. So clearly China, there's a lot more going on in terms of sort of geopolitical rivalry and so on, and a view on the past abuse potentially by China and the Chinese state in terms of taking advantage of World Trade Organization rules and so on. And then Europe. I mean, Europe is, I think, already sounding a little bit more hawkish, a little bit more inclined to play hardball, talking about retaliatory tariffs if they can't do a deal, saying that Trump can't do side deals with individual countries and so on. All of it suggests that the places that have trade surpluses with the US are not going to roll over and just accept what they're given. And I think, so I think the assumption that because the UK's done a deal, that it's going to be easy for everybody to do a deal, and the deals inevitably will, end up at a much more comfortable place for the global economy. That might ultimately be true, but the path to get there may be pretty bumpy. It may take some time, and it might do a lot of damage to global growth, particularly US growth.
Yeah, the world is definitely shaken, absolutely. John Stopford, thank you so much, Head of Multi-Asset Income at NinetyOne Asset Management. And I think John's quite right in that we've got a very bumpy year or two to go. And, South Africa, we had our conversation over the phone between President Cyril Ramaphosa and President Donald Trump, but that was just the start. And I'm not even sure if that touched on trade.
The Money Show.
The markets.
So it was a lovely Friday today on the JSE, and at the close, the All Share up as well, and looking at some of the miners and some of the others as well. I think We Buy Cars did very well today on the JSE. So it was a great way to end the week. And joining us is Grant Nader, who's the portfolio manager at Benguela Global Fund Managers. Grant, hi. It's good to chat to you again on the Money Show.
Yeah, lovely. Thank you. Thanks for having me.
Right. So, Grant, what happened on the markets today? It was a nice finish. What was driving all of this? I also saw Old Mutual was up as well with their new CEO.
Yeah, clearly the market liked that. There's definitely a little bit of a positive overtone. If you think this week we've had talks of US-China getting around the table this weekend, it's obviously still early days, but that's a step forward. We had UK and US news coming out. Perhaps that trade deal is not as great as it was made out to be initially, but it's still better than no deal. And so you've got this incrementally positive news. We hit peak negativity, I guess, around a month ago. And since then, things have only, there's slightly less bad. And that tends to be the kind of thing that moves markets. The other thing I've noted is that foreigners have been buying this market. So foreigners are optimistic on SA. They're looking at emerging markets like ours. And you've seen net inflows for, I think, the last 7 or 8 days. And, I mean, that's really encouraging from where I'm sitting.
Yeah, no, it sounds really good. It certainly does. Also, the gold miners, some of the platinum producers also doing very well today. I would think it's just the strong prices that are driving this. Do you see anything else?
No, it certainly is the prices. So there's definitely a bid around in palladium and platinum. And there's a sentiment shift. I've noticed over the past couple of months, this complete negativity around the future of the metals, given the EVs overtaking everything. There's a sentiment that's changed where people are realizing, well, it's going to be more of a transition. Hybrids are going to be a big part of the mix for some years ahead. And so this drop-off, expected like falling off a cliff in demand, is not likely to play out. And so on that basis, around current levels, there's some people see value in these PGM players. And maybe it's a short-term trade or 1 year or 2 year view. But certainly there's a lot of more interest on the buy side at the moment.
Yeah. And of course, Neil Froneman from Sibanye-Stillwater, he must be smiling. He is smiling this evening. Those are huge results today.
Yeah, they were good. I mean, look, they came off a low base and they were helped by some of the restructuring initiatives in the US palladium operation. But nonetheless, a good result. And they need something behind them. The gold is helping. And they've got this big balance sheet debt they need to pay down. So this will go a long way toward easing some of those concerns that I think a lot of investors have had. And they've probably stayed away from this one for a while.
Yeah. Grant, other movers and shakers today. I saw We Buy Cars doing very well. Some of the other ones, Aspen also up as well.
Yeah, I mean, I think Aspen was boosted by the sentiment. You know, Stephen Sard stepped in and bought 100 million worth of Aspen. It's not significant in his net worth equation, but it is significant in sending a message to the market, a message of confidence in his company. We Buy Car continues to operate well. The used car market is benefiting, from this prolonged expansion. This sort of, let's call it invasion of Chinese cars is not bad for We Buy Cars. They will benefit no matter what. They just want to see increased activity. So I think they're well placed. The market's starting to realize this is a really good business with a strong platform. And the numbers are coming through in their results. So it's a good opportunity. I think it's going to go further than this still.
Yeah, those Chinese cars, there's a whole discussion right there. Grant Nader, Portfolio Manager at Benguela Global Fund of Managers. Good to have you on The Money Show. Enjoy your weekend.
The Money Show.
The Friday File.
The Friday File.
It's 6:45, Ray in for Stephen this evening. And I love this part of the show because the Friday File deals with businesses that need a bit of exposure, need a bit of discussion. And tonight we're talking about Pomellato's Together collection. It's a celebration of unity and individuality. That's what they say. It's the latest collection that showcases elegant jewellery that embodies emotional connections and personal style. When we saw this, we thought, okay, now this is very interesting. On the line is Debbie Hathway, who's a watches and jewellery writer. Debbie, hi, good to chat to you once again.
Hello, Ray. Yes, it's been a while.
It's been a minute. It certainly has been. So, Pomellato's Together collection. We're talking about, they call it a celebration of unity and individuality. What are we looking at?
Yes, Ray, just going back to what you said in your introduction about brands that need a little bit more of an introduction. For listeners who don't know the brand, I think it would be a good idea to give them some perspective. And one of my Italian friends recently said, Pomellato is to Milan what Bulgari is to Rome and Firenze is to Florence.
Ah.
So that really gives you perspective as to what their status is and how important the Made in Italy sort of banner is in terms of their status in fine jewellery making as such. In terms of the Made in Italy hallmark, again, just to explain that a little bit further, it's all about products that are made, often handmade, designed and manufactured in Italy, and brands that are very, very proud of that, where they tick all those boxes. So moving on to the Pomellato Together collection, that's all about reimagining the bond motif in their collection that is connected to emotional ties. So it can be love, it can be romantic love, it can be friendship, or it can be a family connection. Just something that holds people together.
Right. So we've got, is it watches? Is it rings? What's sort of their trademark? I mean, normally, like you said, this is kind of a leader in Italy when it comes to style. What's their trademark?
Yeah, in terms of this collection, they make necklaces, rings, and bracelets. but the style is not overpowering. Pomellato was founded initially in Milan in 1967 and are known for their ready-to-wear fine jewelry. So their idea is to create bold, sensual pieces that women can wear every day. So in terms of the focus on unity and individuality that you mentioned earlier, they've sort of piggybacking on the movement that's been around for a while now, where jewelry must have personal meaning. It's got to have value to the person who's wearing it. So they make the pieces that feel intimate. They must tell a story. And if listeners go onto the Pomellato website and have a look at the pieces, you'll see the way that it's made. There's a little link that implies connection without possession, if that makes any sense. So the way they've designed it, you can see that there's a connection, but it's not a hold. In the negative way that some relationships can be in terms of possession.
No, absolutely. You spoke about jewelry that a woman can wear any day of the week kind of thing. Is it a bit like Burberry when they first came out, the fashion label Burberry? And that was supposed to be general workwear, which became more than that. It became quite a styling fashion thing that costs a lot of money today. Is it the same sort of thing, or are their goods affordable?
Well, define affordable. Brands that brands that play in this space like to talk about accessible luxury at their entry point. So they don't sort of use the term affordable. They prefer accessible. So there will be sort of entry points that might be too much for some of us, but might be highly accessible for others. But the point for them is to create jewelry that makes a woman feel confident, independent, and expressive. So she can choose jewelry that reflects her values as much as her style. And she can buy it for herself as well. A lot of the brands do that now. They encourage women to select their own pieces and not wait for it to be gifted to them. But having said that, Mother's Day in South Africa is coming up on the 11th of May.
Exactly. There we go. That's Sunday, by the way.
Yeah.
Exactly. All right. Do they have a website? If somebody's listening to this and they think, Debbie, I want to go and buy myself, my wife, my mother, my girlfriend, something, where do they go?
Yes. Their website is pomellato.com, Pomellato. And there are only 2 outlets in South Africa where people can buy locally, and they can find that online if they do a location search.
Yeah. Just a final question. I mean, Debbie, what have you spotted there? I mean, you're a keen shopper. You know your watches and your jewelry. I know that you do. What have you spotted and you thought, now that's a good idea?
Well, several of their rings allow space for engraving, which is lovely. I mean, that makes it even more personal. So again, whether it's a piece that you're buying for yourself or whether you're gifting it to somebody else, I think that's lovely. And their pieces are designed to be stackable as well, so that you can wear more than one. And another sort of very important philosophy that underpins Pomellato as a brand is their advocacy for women. They are very active around gender equality, and they have a Pomellato for Women platform that partners with organizations to support survivors of domestic violence.
Right.
So their campaigns often feature people like Jane Fonda, who encourage people to speak out, stay watchful, and stand up for others. They call them social sentinels. So it's rare to see that kind of social advocacy in the luxury space. So I think it's important to connect with brands that link to your values, which might be something like that as well.
Exactly. Absolutely. We'll have to leave it there. Debbie Hathway, thank you so much. An expert in watches and jewelry. Right, Mother's Day. That's on Sunday. You've been warned.
Walking this talk together.
Every hour.
Every day. This is 702.
Let's walk the talk.
Coming up next, it's the Friday Biz Blitz, and you know how this works. I'm going to ask you a series of questions. If you are the last person standing, you'll be the champion of the Friday Biz Blitz. And I'm challenging you tonight that you are not going to get it right. In fact, I am challenging you tonight that by 7 o'clock, I will be the champion. Let's see if you can knock me off my pedestal. Question number 1. 011 883 0702 021 446 0567. Question number 1. Robert Prevost was recently announced as the new Pope. What name did they choose as his papal title? In other words, what's the Pope's new name? 011 883 0702 in Cape Town, 021 446 0567. The Money Show with Stephen Grootes is brought to you by ABSA Corporate and Investment Banking. ABSA is a proud lead sponsor of B20 South Africa 2025.
Because this journey is better taken together.
Let's walk the talk. 702.
Well, the tension is now mounting. It's the Friday Biz Blitz, and I'll be asking you a series of questions. If you are the last person standing, you then will be the champion, and you will be knocking me off my pedestal because I'm challenging you tonight. You're not going to win. We've got 4 minutes together before the 7 o'clock news, Eyewitness News. Question number 1. Robert Prevost was recently announced as the new Pope. What name did he choose as his papal title? Let's go to Mandla in Rosebank. Hi, Mandla.
Hi, Pope Leo the 14th.
Mandla in Rosebank, you're quite right. You're very right. Indeed, that's been the big story from this week. Well done. Cardinal Robert Prevost has been elected Pope and will be known as Pope Leo the 14th. The 69-year-old is the first American to become pontiff and will lead the Roman Catholic Church and its 1.4 billion followers. All right, Mandla, my money is on you this evening. Which tech company acquired Skype in 2011 for $8.5 billion, marking one of its biggest consumer-focused deals? In other words, who bought Skype in 2011? Mandla.
Any clue?
No. You've got 5 seconds. 5, 4, 3, 2.
Microsoft?
Yeah. Yes, indeed. Microsoft, you're quite right. In 2011, Microsoft bought Skype to bolster its communication tools and compete with Apple's FaceTime and Google's voice offerings. Of course, as COVID came along, and all of a sudden, that was the big one. Teams was the big one. All right, 2 out of 2. All right, here's another one. What, Mandla, what is the parent company for both Corona and South African breweries? What is the parent company for both Corona and SAB? They bought them many years ago, and they're known as, Mandla?
InBev.
I'll give it to you. I'll actually give it to you. AB and Bev. You are quite right. AB InBev reported higher earnings thanks to stronger pricing, growing demand for premium and no alcohol brands. All right, if you get this next one, I will give it to you. You will be the champion. You will knock me off my perch. If you don't, Mandla, it's just not your Friday night. Okay, and this is an easy one because we've been talking about him for years. Very often we will go off to Omaha and we will listen to him, what he says. I know many business presenters who have gone off to Omaha in the United States. The question is, which revered investor nicknamed the Oracle of Omaha is preparing to retire? Mandla?
Okay. You can start with a countdown.
5, 4, 3, 2,
Warren
is
Buffett.
Warren Buffett. You are the champion of the Money Show. Well done, Mandla. Well done. You are the champion. On Monday, I want you to phone 011 883 0702 and give Stephen a hard time because I said you can. It's as simple as that. Mandla, awesome. Have an awesome weekend, hey? An awesome weekend and well done. Cheers.
Thank you, sir.
Bye.
Bye-bye.
There we go, Mandla. It's as easy as that. Mandla in Rosebank. He got it, like 4 out of 4. He just killed it. He certainly did. Warren Buffett is ending his career as perhaps the world's most famous and revered investor, saying he will step down as CEO of Berkshire Hathaway at the end of this year. And that wraps up the first hour of the Money Show. But please do stay with us, because up next is the best bits. It's just gone 7 o'clock.